This is a logarithmic scale. So
Wow.
so we're multiplying by 5 every time we go up. I want to show you
Wow.
the same thing on a linear scale. This is this is it.
Oh, man.
This is it. And prices measured in gold. So if you take the CPI and just divide it by the price of gold, that's the yellow line. It goes from 169 to 100 down to 34, right? Over the span of 219 years.
Wow.
All of the sudden, this green line shoots up like a rocket ship because we don't use money, we use currency.
Hi, everyone, and welcome to this video. I've got Alan Hibbard with me once again. Alan, how are you doing?
I'm great, Mike. Thanks. How are you?
Great. So you've got some information that you're going to present to me, and I sort of know that it's about inflation, but it's something I haven't seen before. So I'm going to be reacting to most of it like on the spur of the moment. So what have you got?
Yeah, it is about inflation, and I wanted to use the world's most famous restaurant chain as an example, McDonald's.
Okay.
This is an old menu back when hamburgers were 15 cents and cheeseburgers were 19 cents.
Yes. You know, when I first started going to McDonald's, for a nickel, you could get a hamburger and fries. And by the way, in our prep, you said, it's about inflation, about prices going up. No, it's about the currency going down.
Yes, exactly. And I was definitely going to mention that, but yes, thank you. So anyways, McDonald's has been in the news lately because of outrageous prices. The McDonald's CEO promises, quote, affordability amid backlash over $18 Big Mac combos and $6 hash browns. So there's a Big Mac combo that was $18 at one particular franchise. Yeah. Now, again, that's the combo. It's not just the sandwich. So maybe the sandwich was $9, $10. I'm not sure.
Okay. Go back to that menu for just 1 second. So if we take 2 of those hamburgers and take, the bun off of one of them, insert the patty. Now you've got the Big Mac, a double patty, and the French fries. And then we need to add a Coke to it, 10 cents. So you have 30 cents for the hamburger and 50 cents. So from 50 cents to 18 bucks. Oh my God.
Plus cheese. Don't forget 4 cents for cheese.
Oh, yes. Well, 8 cents because it's 2 patties and two slices of cheese. So yeah, that's 58 cents. So under 60 cents, and it's gone to $18. Unbelievable.
Yeah, that's a factor of 30x.
Wow.
So crazy prices. And this article is from early February this year.
And but I'm sorry I'm interrupting, but they have to do whatever keeps them in business. It isn't like they are purposely going out to pillage the public. The inflation isn't caused by McDonald's. The inflation was caused by the Federal Reserve. And
exactly. Yeah.
So yeah,
I certainly don't mean this as a criticism of business or anything like that. Right. So one of the quotes from this article comes from McDonald's chief executive, Chris Kapczynski. He says, I think what you're going to see as you head into 2024 is probably more attention to what I would describe as affordability.
So they can add some sawdust to the hamburger buns and,
Oh, gosh. Yeah.
Right.
But anyways, in particular, low-income customers making less than $45,000 per year have largely stopped ordering from McDonald's.
Wow.
Pummeled by inflation, they're eating at home more frequently as grocery prices come down, according to the executive here.
Wow.
So yeah, that's interesting. I mean, low-income customers, that really is their target market, as far as I'm aware. I don't know many wealthy people who eat at McDonald's. So a similar.
Right. I think I ate at a McDonald's about 15 years ago, maybe 20.
Yeah, it's been a few years.
It was only because I was on a road trip and I had to. So
exactly. A few months ago, there was a similar article on the same topic. And during an earnings call with investors, the CFO, a different gentleman, confirmed that the company's U.S. prices did increase in the third quarter. Again, this is 2023. Though he didn't specify by how much, he said McDonald's expects to increase the cost of its menu items by just over 10% for the full year, which is the second consecutive annual 10% price hike. So that's 10% per year, 2 years in a row. That's
right. And
huge.
you've got to take into account that this is one of the most efficient companies on earth. They are buying their beef and all of their supplies. They are buying at the lowest cost that you can possibly get them anywhere on the planet. And then they have very efficient supply chains and very efficient, all the food processing and everything, the cooking and everything they do, right down to the delivery of the customer, everything has been studied and efficiencies constantly improved from the late 50s until today. And so there is nobody better at doing this. If they've done it 10% year over year twice, that means that inflation, the real rate of inflation for them, for their supplies and for the labor that they have and everything else, that's what they are experiencing on their cost end of the balance sheet. So yeah, or not balance sheet, but yeah.
The income statement.
Income statement, yes.
Yeah, I get your point. Yeah, definitely, and I agree. And to your point, it's not isolated to one particular company. We can even see in a quote below here, one Reddit user asked in a now viral thread, "What is no longer worth it because of how expensive it has become?" Top rated response: most fast food. Right? It's not just McDonald's specifically. It's most fast food. This is an entire sector of the economy that specializes in providing food as cheaply as possible. And even they can't keep prices down because of all the currency printing.
Yeah, rice and beans at home is much cheaper.
Yeah, not as tasty, but
right.
And if you're on the road, you're not at home, so you might not be able to get those ingredients late at night. So anyways, so this seeing these articles reminded me of something that I wrote actually a few years ago and published on Quora. So I want to share with you a little bit about that. I made this chart, which is a combination of M2 in red and the Big Mac index, which is put together by The Economist in brown, and they're on different scales here. So it's not exactly perfect, but you can see that even one of the most efficient restaurants in the world isn't immune from all of the currency creation. So this brown line basically follows the red line all the way up. And this is just about 20 years. I think I made this in 2019. So yeah. So, I mean, the prices are rising despite their best efforts to keep them down. Right.
Increases in efficiency and productivity only go so far.
Exactly. So
and you know what? I just got to point out that this is the Federal Reserve and the government stealing from all of us. This is theft. These people are criminals, basically, but it's legalized. So, under the law as it currently exists, they're not considered criminals. But morally, this is wrong. So,
yeah.
Okay, go ahead. I'm sorry I went off on that, but it was important to me.
It's okay. And I agree with you. And I think some things are coming up that will illustrate that. So anyways, this article that I wrote actually was from a question about Bitcoin. Somebody asked, will Bitcoin ever hit 100,000 per coin? Why or why not? But the point I made was about inflation. So we're not going to talk about Bitcoin. And by the way, this is my picture on Quora. That's an old one. That's when I had long hair. So this is going back. Anyways, so here's what I said. In my opinion, yes, absolutely, Bitcoin will eventually hit $100,000 per coin. But my prediction isn't really about Bitcoin. It's about the dollar. In some sense, the person asking this question can be, it can be restated as, will the Federal Reserve keep printing dollars? And the answer is yes, absolutely. For some bizarre reason, the central bankers of the world think that printing currency will somehow boost the economy. In reality, it just steals from the poor and transfers it to the rich. But that's a discussion for another post. And then I have a chart coming up. Look at this incredible exponential growth in quote unquote money printing during the last few years of quantitative easing.
Before you leave this, though, I have changed printing because everybody says printing. But printing has costs to it. There's paper, there's ink, there's trucking and everything else. And they don't do that anymore. They type it into existence. It has virtually the total cost, the effort behind, I can't remember who it was that Dan pointed out that somebody had said that the difference between, maybe it was in one of the
comment section
comments under a video that the difference between 1 and 1 trillion is 12 zeros.
Yes, I remember 12 keystrokes. 12 keystrokes.
Right.
Yes.
That's it.
I remember that. And that's part of the reason I put printing in quotes, and I also put money in quotes, because even back in 2019, I knew the difference between money and currency. So
yes, right.
So anyway,
you remember what people do is they normalize the dollar. When we were writing the Great Gold and Silver Rush of the 21st Century, in one of the chapters, I had to do a whole bunch of charts where we normalized real estate and gold and silver and the U.S. dollar. And so we would everybody thinks of everything in terms of dollar prices. Nobody thinks of the value of gold in how much of a single family median price home it requires to buy a kilo of gold or whatever. And so you did a whole series of but it was just too complex to put in the book. And it was a stretch to get people to follow that. But someday we will publish it, because it was important, because people have this bias that they've been brought up since birth now. But people have this bias where they normalize everything to whatever their local currency is. And in a lot of parts of the world, it'll be their local currency and the US dollar. But nobody takes a look at life by normalizing it to, how much of what percentage of my house is that thing worth, or what percentage of a barrel of oil, how many barrels of oil does it take to buy a car? And the point is that the dollar lies. So, yeah. So go ahead with I'm sorry. I went off on another tangent.
It's all right. It's all good stuff. So I wanted to show quantitative easing and really just currency creation even before they called it quantitative easing. So I've got this meme from the back here. And if I remember, this was from Germany, sweeping up all these currency notes. Yeah.
Yeah. The Weimar hyperinflation. Yeah.
Exactly. So quantitative easing. If you don't know what it is, look it up. So I have here since 1960, I have M2. And I took the first 10 years, which was pretty much linear, and just extrapolated it. That's this yellow dotted line across the bottom. This is a linear path. And the red is, of course, exponential. So this is really just showing the currency creation over 60 years. And of course, it's continued beyond this. And the point is, in the Big Mac graph that we showed a minute ago, this red line is the same. So it kind of looks linear on this scale, but it's the same red line here from 2000 to 2019. So it is exponential. And, the cost of Big Macs is going up exponentially to stay in line with all that currency creation. Yeah.
So we figured 68 and to $18. Unbelievable.
Yes.
So that is an exponential function. I mean,
definitely it is. Definitely it is. So from that core article, I had 3 key points. If the Federal Reserve, this one's about Bitcoin, so it doesn't really matter, but eventually just the price of anything will go up. If the Federal Reserve continues printing dollars exponentially, the dollar price of Big Macs will continue to rise exponentially. So eventually they will reach $10 or even $100 per Big Mac.
Yeah,
we're past 10.
Right.
Maybe not nationwide or maybe not worldwide, but certainly at some franchises it's at 10. And just in terms of Bitcoin, but really this generalizes to anything. Obviously, $100,000 Bitcoin only refers to the price of that thing.
Italicized, yeah.
Yes, it says nothing about the value, which is what really matters. So again, we hammer this point home all the time, but if everything all of a sudden costs $100,000, that you can think of it as a ratio of 1 to 1.
Yeah.
It's not so much that, you have a lot of dollars necessarily. So some interesting comments came out of this. So below my article, there were so many comments, like 60 something comments.
Hi, I just wanted to take a moment and thank you for subscribing and mention that if you'd like to help our channel, please consider my company, GoldSilver.com, the next time you buy precious metals. We're one of the most trusted names in the industry. Our prices are sharp, delivery is fast, and we have an insiders program where you find out exactly what I'm doing with my own investments. Thanks for making GoldSilver.com your dealer. And now back to the video.
So many comments, like 60 something comments. And so I just want to go through these quickly and get your comments on these comments. So following your logic, my logic, the price of Bitcoin may rise exponentially, but also it may end up buying the same amount of Big Macs it buys today. Sure, of course that's possible. I mean, I don't think that's going to be the case. I expect Bitcoin to rise more quickly than Big Macs, but sure, if they rise in tandem, then it would buy the same amount.
You have to look at the size of the asset class, like, you know, gold, silver, Bitcoin, and the number of dollars rushing into it from whatever other investments it's coming out of. But yeah, absolutely, it should go up. Bitcoin should purchase a whole lot more Big Macs, but it should purchase many, many times more currency.
Yes, exactly.
Yeah.
This is a good answer. Thanks. I like this one. A Big Mac will never cost $100. Give me a break. I totally get how outrageous that sounds because exponential functions are not intuitive to people. But if we think about that math we just did, going from 68 cents all the way to $18, I guess that's a combo meal. So maybe for the individual sandwich might be $10 or $12.
How many years does it take for something to double at a 10% compound annual rate?
That's where I was going. So exactly.
So
if we did 10% 2 years in a row, if we just use the rule of 72, we divide 10 into 72, we get about 7 years to double in price. About 7 years. So if you want to go from, let's say $12.50, okay, which is shy of 18 because it's a combo meal. So let's call it $12.50. And the reason I'm saying $12.50 is because a factor of 8 would get it to $100 even. A factor of 8. So 8 is 3 doublings. 3 doublings times 2 times 2 times 2, you've multiplied by 8. So in order to get 3 doublings at 7 years per doubling, that's 21 years. So in 21 years, we could very realistically have $100 Big Macs.
Yeah, if nothing really big happens between now and then that causes them to panic and print currency like crazy, type currency like crazy. Sorry.
That's right. So so we could see $100 Big Macs in 21 years. I mean, I'm only 35, so I'd be 56. And I'll be saying, you know, when I was a kid, I remember when you could get a Big Mac for $1 or whatever, and everyone would be spending $100, and they'll think I'm a crazy old man. So anyways, I do think that's very likely and reasonable, even though it sounds absurd. So anyways, we have another quote here, or a comment here, which is very interesting. Why hasn't the price of gold hit 100,000 per ounce then? Which is, it's an interesting thought experiment. And I think you sort of answered that question. It depends on the size of the asset class and so forth.
It does. But when it comes to like the official price of gold, you know, countries all over hold gold as an asset. Not every country, but a lot of them hold gold in their central banks. And on the Federal Reserve's balance sheet, if you look at their, I can't remember, it's the H.4.1 or H.1.4 release. I can't remember. But gold is on there, and the gold at the Federal Reserve is pledged against the currency notes in circulation. So cash in circulation. But right now it's at the official price of $44.2222. 2222. Yes, there's 4 2s back there. It is backing the dollar to, I believe, 0.4 cents per dollar. There's that much gold there. And if there was a crisis and for some reason they had to make the dollars convertible, I believe that today it's somewhere around $9,300 an ounce. Something like that. It was 92 last time I looked, and it's constantly rising because the currency in circulation that's one thing that doesn't seem to be going up and down and up and down. Like right now, M2 has been contracting. Now it's expanding again. So it isn't something they can easily just type in. There's actually some work involved.
Exactly.
So,
So roughly a fair ratio right now is roughly $10,000 per ounce. Roughly, obviously the price hasn't caught up. But again, one more keystroke, one more zero on the currency printer, and it goes up by a factor of 10. asset prices would also go up by a factor of 10. And then all of a sudden gold goes from 10,000 to 100,000.
Exactly.
So
yeah. And, it really does take, there's going to come a day, and I don't know when it is, but it takes a loss of confidence in the currency. It takes a little bit of fear to enter the market. It might be with our next great crisis, which I do believe is lying in wait somewhere just around the corner. And I call it Bernanke-geddon, because it is all Benjamin Bernanke's fault. Yellen and Powell are just, using his playbook, but he changed the rules of the game completely with Bernankenomics. So yeah,
definitely.
Okay, let's go on back to the presentation.
Okay.
Yeah.
All right, we're almost done. Last comment here. Good post. This is kind of a TLDR. Like if you just want the highlight, this is it. Central banks cause dollars to be printed in the U.S. It is the Federal Reserve. Supply and demand. More dollars chasing the same product equals price escalation. So yeah, basic ratio. I mean, this is a nice, succinct way to put it. So
purchasing power of the currency declining.
Yeah, a lot of people, when they think of supply and demand, they think of the supply of the goods you're talking about and the demand of the goods you're talking about. And they just think that dollars are somehow this fixed thing that just doesn't change. But the dollar also has a supply. It also has a demand based on people's willingness to borrow and so forth.
And that was the great thing about gold, was a fairly fixed supply, because the stock to flow ratio is what's important. People say, well, what about, if we discover an asteroid made of gold and we start doing asteroid mining? Fine. You invest the trillions upon trillions of dollars that it's going to take to put all that infrastructure in there, and then see what the price of gold is by the time you get it back to Earth from an asteroid. It's not like if you find enough gold in an asteroid to double the supply on Earth that it's actually going to cut the purchasing power of the gold in half. Gold was and is an excellent monetary system. It's not being used right now simply because mankind doesn't have that much influence over the supply, that stock to flow ratio, how much is in the system compared to how much we can add each year. And even if you raise the price of gold to $10,000 an ounce today, and there's a gold rush and everybody runs out and starts looking for gold, it takes years for that to get into the pipeline. And still the stock to flow ratio isn't going to change that much. And so the purchasing power per unit remains sort of in a valuation channel, undervalued or overvalued. And right now, I still believe it's very undervalued.
Yeah, definitely. I totally agree with you. Well, speaking of gold as a monetary system, I want to zoom out and look at basically the prices of the average thing in society, not Big Macs in particular, but just the average level of consumer prices since the year 1800. So here, this is a chart, again, I made back in 2019. This is the CPI in the green line, indexed to 100 in 1914, and it's over 200 years of data. And the one thing, and then the yellow line is gold. And the one thing that people don't realize is that the CPI fell pretty consistently on average until the creation of the Federal Reserve. This is something people don't realize. The CPI fell. So on average, goods would get cheaper. Hamburgers would get cheaper. Coffee would get cheaper. Beer, horses, saddles, whatever you have. Everything.
Single family median price home. Yeah.
Homes, exactly. Everything tends to get cheaper on average because people find ways to produce it more cheaply. And that's
productivity and efficiency increases, and new technologies that we keep on discovering. Yeah, exactly. And, during that period in the late 1800s, we had quite a bit of currency creation. Oh, that area where it sticks above the gold, that green line there, that's the Civil War and the greenback that Lincoln printed. I will bet.
Yes, it is.
Right. And, during that period, there was an expansion of the currency supply. We had a free banking era when just about anybody could, if you ran a general store, you could make your own currency because it was all IOUs. But velocity fell to compensate. And it was basically just the we're seeing just the efficiency of mankind getting better at everything that we do.
Exactly. And so the other thing to point out is this is a logarithmic scale. So
Wow.
so we're multiplying by 5 every time we go up. I want to show you the same thing on a linear scale. This is this is it.
Oh man.
This is it. And prices measured in gold. So if you take the CPI and just divide it by the price of gold, that's the yellow line. It goes from 169 to 100 down to 34, right? Over the span of 219 years.
Wow.
All of the sudden, this green line shoots up like a rocket ship because we don't use money, we use currency.
Yes, and that is all theft and enslavement because this is the M2, right?
This is the CPI.
Oh, okay, measured in dollars. So it's consumer prices, which M2 would have affected more than currency in circulation or any base currency that is created by the Federal Reserve. So this is also created by the banks, but it's not just theft. So when a bank, you bring a home to the bank and you say, this is worth $1 million. I want to borrow $1 million to buy this home. The bank types that currency into existence that didn't exist. And anybody that wants information on how this is done, just go to ggsr21.com and download chapter 4 for free or watch the videos on it. And thanks, Dan. But it's all free, and you can see all of the processes there. But when they do that, they're typing into existence. It doesn't get its. When we used gold, somebody had to mine. They had to go out and prospect. So a bunch of time and effort was expended. And then they had to turn that into a mine, and they had to mine the ore and then mill the ore and make it into gold, and then pour the gold into bars. And then the gold bars had to be melted and turned into coins. And then the treasury would come along and print gold notes, which seems like theft, but it wasn't, because it bought the gold coins, but they were redeemable in the gold coins. So if you saved up and made it, saved up a stack of gold coins, the value of that, all of the time that you spent, equals the value of chopping down the trees, making the lumber. If you're going to buy a house, by the time you get that house all hammered together, the cement, the copper, and everything that's in that house is about equal to it. So it was a fair trade. Now you've got this purchasing power that is just typed into existence, and you've got this house that's all of this effort and investment and companies and people doing this. You type this into existence, and it's a fraud. It's a theft that is going on. Where did the purchasing power come from? It came by typing new currency into existence and diluting the currency supply, thus stealing from all of us and causing that green line to rise.
Exactly. Couldn't have said it better myself. So last thing I do want to say here is, if you sit there and you hold dollars, your prices are going to go up and up and up over time, and you're not going to be able to afford very many hamburgers or houses or anything. But if you own gold, your prices are going to go down over time, and all of a sudden you're going to be able to afford so many hamburgers, so many houses, so many of whatever you want. So to me, which one am I going to hold? Well, I'm going to hold a lot of gold and very few dollars.
Right. And some people will say, well, gold doesn't pay interest. Well, you can't get enough interest on those dollars to cover that price rise. Even with the interest, you are losing holding dollars and you are gaining holding gold. Thank you so much for this presentation. That was great.
Yeah, thank you, Mike.
Okay. I want to remind everybody, please like and subscribe, and we're going to see you in the next video. Thanks.